Hi everyone, it's Mike from FXBattleground.com. Let's take a second and go over this Euro US dollar play, taken off the daily, but entered on the 1 hour or the 4 hour, whichever one that you choose. This is a play that we talked about in the weekly update on Sunday, and it's now Monday, and overnight, Sunday night Eastern Standard Time is when the play triggered. So this is the daily chart. You'll see that the Euro dollar has run up into this area, pulled back a bit, then put in a slightly higher high, and then start to move down through the 20 moving average. Pretty decent run down, and then a slight retracement back right up to the 20 MA. Now, these two horizontal lines indicate what we call battleground, where here it was a battleground to get through it, come back. The bulls end up winning this battle on a what we call bull 180. They tried it. The bears try to take it through the battleground again. The bulls come up and win. Now in this case, the bears do win this battle and come back down. And here we come up to test this area once again. So this is an area that's been fought through several times. A decisive win through here, and then the bulls try to push back up through. They're going to get a lot of resistance in this area. Former support becomes resistance. In addition, the 20 MA is sloping over. There's a catch on the 20 here. Another clue is you'll see here in the stochastics that we're overbought up here, which is not necessarily means a short, and you can stay overbought for a long, long time. But look on the Elliott wave oscillator. This is a clue that you'll see. If you use it often, you'll understand how it works. We have what we call divergence here, where on price, you can see there's a higher price at this point here, but on the Elliott wave oscillator you have a lower move. So it's a clue to help us see that possibly this move has run out of steam, and to start looking for indicators or indications that maybe a downside move is in the play. This move down through this battleground area and then a return back up to a declining 20 MA is enough to take a play in my book. So the risk reward is there because we are overbought. It could mean a pretty substantial move down. And on the weekly, you can see that the pattern is not clear. We are approaching an area of trouble. There is also a battleground area right here that the euro has run into a couple weeks ago and has started another move down. It is approaching the rising 20 MA, but there's a lot of room between this entry, which was actually up here in between these two green lines, and this rising 20 MA. There's 500 pips there, so you can't let this weekly chart throw you off and say, oh, I can't short because here comes the rising 20 MA. I don't feel good about it. It's something to think about, but unless you're a weekly player, you got to realize there's 500 pips here that if you enter in a 4-hour or 1-hour chart, you're very likely to get safe on a good move, and you never know what could happen, and there's plenty of room to run. So let's move down past the daily. Here's the daily area again that we're talking about, the area of focus. Let's move down to the 4-hour. Now you'll see that it trades up, 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 back into an area, this battleground area. This is what we want. We don't want to short after 610 bars down. This is never the time we want to short. We wait for this 610 bar rally on the 4-hour, which is a 2 or 3, 4-day rally on the daily chart. This puts us back into an area where we have a great risk reward, and then we can get short on the signal here with a small risk and a much bigger reward. So if you took this sell setup on the 4-hour, it would be the size of this bar, would be an aggressive entry. And you're talking about a distance of about 60 pips, 70 pips, and then here's the payoff. This is at least 2 to 1 and working on 3 to 1. But the hourly chart is where the real entry was. Here we are moving up into the area. If you're not convinced, then don't move. So if you see these inside bars, inside bars, inside bars, and then here's this fly up into the area, which was almost exactly the daily 20 MA, and then the reversal, immediate reversal back down to form this nice pin bar. This should be all you need to see. You're in the area, you have confluence, you have several things happening all at once. You're overbought on the daily. You can see you're also overbought on the hourly. So this has gas in the tank. This is happening in your area. There's a lot of things aligning in your favor, and this pin bar, this rejection, should be enough to tell you this is a high odds trade with a lot of risk reward. This is the kind of trade I want to be in. So enter below the low of the pin bar if that's what your plan says. You can put the stop above the high. You could do a retracement entry if you weren't worried about missing out on an hourly time frame. I would say the best case would be to enter on the close, because you just never know. On hourly, it can move away from you so quickly. Possibly on the daily or 4-hour, a retracement entry could work out better over time. But this is 28, and so this is about a 60 pip stop. And here it has run at least 2 to 1, almost 3 to 1 down at the bottom here. Of course, you won't get it all, but this is a great trade. You should have held for at least 2 to 1, and then maybe take some off and move to break even or down possibly above this green bar here to lock in this whole move at 1 to 1. So you lock in at least 1 to 1, take some at 2 to 1, allow some to run further. So this is the play. It could continue to go all day long. This could be a sell-off of, it could be huge, and you're in right up here at the top. You just never know. There's a lot of places it could go. It could come all the way down to the bottom here. The only thing that's really just going to slow it down is going to be this weekly chart. When it gets to the bottom of this tail, back in this area, the rising 20, this is going to be an area that's going to have to fight through. But overall, great trade, great area. If you find these, if you take nothing but this type of trade, you're going to be doing pretty well. And your equity curve is going to rise, rise, rise. So just keep doing this. Take this loss. If this loss happens to you, don't be devastated. Don't be upset. Your job is just to take these trades, not to win every one. So just keep taking them. Use the correct risk sizing so you don't take yourself out of the game before the equity curve starts heading in the right direction. You might take 2 or 3 losers in a row. Be sure that you know what you're doing, and trade with demo money until you know. All right, it's been just a review of this Euro play at fxbattleground.com. Have a great day.